In today's video, I'm going to teach you the best trading strategy for indices, whether you're a scalper, whether you're a swing trader, whether you just like to enter and close a trade after a few hours. This strategy is going to complement whatever you like to do. Now, this strategy is going to give insane reward to risk numbers. I'm talking about easy 10 Rs, 20, 30, even 50 Rs if you're able to follow this strategy. Now, this video is going to put the cherry on the top for the two videos that I did called My NAS100 Trading Strategy and My NAS100 Scalping System. If you have not seen those videos, I recommend going to my video description. And even though those videos are directed at NASDAQ 100, they're also going to apply to US30 and other indices such as DAX. So without any further ado, let's go ahead and dive in, and I'm going to teach you the best trading strategy for indices all across the boards. Let's get right into it. Now, my strategy involves a simple candle pattern called the Kangaroo Tail. Now, for example's sake, this right here is a bullish Kangaroo Tail. So what is a bullish Kangaroo Tail? It's basically a hybrid of a hammer. We have a very small body and a very long wick. Now, the way that you want to trade these candles is obviously looking for support and resistance, looking for a consolidation, kind of like what we see right here. And this is the pattern that you're going to notice a lot. Sometimes you're going to see price just stay in the same area for 15, 20 minutes. And then all of a sudden, you're going to get a nice wick. And what is that going to signal? Well, first of all, that signifies that the market has obviously gone too far, but there's also another meaning behind why wicks are created. And a lot of traders don't get into thinking about that the market makers, all the liquidity providers, how do they make money? They make money with volume, right? The more trades that are placed, the more money the liquidity makes, the more money brokers make. And the goal of these market makers is to find where is the most volume going to be. So for a Kangaroo Tail, this is signifying the market makers do not want to let the market go down, and we're ready to rally back up potentially like this. Now, this is obviously a picture perfect scenario, but one of the ways that you can utilize these candles is looking for moving average crossovers. For instance, this thin blue line is the 30 EMA. The darker blue line is the EMA smooth by a period of 10. And this red and green line is actually a color-coded 100 simple moving average. So if you ever notice one of these candles, the way you would enter this is very simple. You would simply enter at the close. You would put a stop loss at the bottom of the Kangaroo Tail, which is the wick, and you would hope for the moving averages to be crossed over. And your exit point is obviously going to be either the 30 EMA crossover or the 100 MA crossover. And this setup would have given you a nice 6 Rs. Now, contrary, we do have a bearish Kangaroo Tail up here. And remember how we saw that earlier example? There was nice consolidation and a wick here. We kind of have the same thing going on, right? We have consolidated prices and we have this wick, which is actually a new high. So what you would do is you would simply enter at the close, put a stop loss at the top of the wick and hold. Now, this would obviously be a smaller trade because your first target could be the moving average crossover, or you could hold hoping to get the bigger trend. And in this example, this did not happen. But let me show you another example of NASDAQ on the 2-minute chart. By the way, I recommend looking at the 2-minute as opposed to the 1-minute because the 2-minute will also give you more entries and it's going to clean up some of the noise that you experience when you trade on the 1-minute charts. So right here, this is right before London open, right? We have a bullish Kangaroo Tail. What would you do in this situation? Well, you already know. You're going to put a stop loss at the bottom of the tail, enter at the close, and you're going to hold waiting for moving average crossovers. Now, I think a problem and why a lot of people lose is people go for short TPs like this. Now, there's nothing wrong with going for like 2 Rs, but let's be honest, is that really going to grow an account? A lot of people talk about consistency, blah, 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 risk 1%. In my opinion, going for 1 R, 2 Rs is the reason why you're losing if you're not winning yet, okay? So by using a moving average trending strategy, you're going to be holding because the rule of you closing is going to be dictated whether price breaks the moving averages. And by doing that, you're going to be able to hold much, much longer, okay? Right here, this was a high of about 13 Rs, but your exit point would have been the 100 moving average, and you nail about 10 Rs right there. But let me go to the 5-minute. Let me go to the 5-minute. Sometimes you're going to see this a lot too. Remember the consolidation. This is a higher time period, 5-minute chart, but check out what we have right here, right? We have that same consolidation area, right? A wick. How do you enter this trade? Well, you already know it. It'd be the last example I show you, but you put a stop loss on the top. By the way, the indicator that I'm using is called the RooVersals. This is a complete trading system that I built, has all the bells and whistles, has all the moving averages I'm talking about. It has specialty emojis letting you know when a certain Kangaroo Tail has divergence, when certain Kangaroo Tails have high volume spikes. If you want to check that out, I have links in the video description. Check out the trading strategy. But anyways, you would enter, and at this point, we would actually be entering counter trend. And what we're hoping for is a complete moving average crossover, or we can just book our profits. So here, could have gotten about 5 Rs, but I mean, what do we have here? We have a perfect M pattern, right? Very clear. And not only is it an M, it's a double top with 2 Kangaroo Tails. And as you see here, we see a purple exploding emoji. What does that signify? First, there is bearish divergence on the EFI oscillator, which is the force index. And also there is a high volume spike compared to the previous 3 candles. So not only would you just be in one trade, but you would also be in this trade holding. So the moving average as a target, you're getting close to 10 hours out of that. And if you want to see more about this strategy, go ahead and check out the video description. There's a couple other good videos about this strategy. But if you're looking for a strategy where you want to find long-term consistency in being profitable in the markets, you got to check out the RooVersal indicator. You got to check out my videos. And most importantly, you got to check out my live streams. I stream every single day, 6:30 a.m. Pacific to around 8 a.m. Pacific. And there you can see me trading the strategy live. So if you like to make money, check out more of my videos. And with that said, you have a good rest of the day and hope for you to catch all those pips.